In today's short video, let's have a quick review and analysis over Facebook and Intel stocks. It's interesting to know that Facebook and Intel have been going through lots of challenges from different aspects with two extreme valuation in recent years. What's going on, guys? This is Barro AKA investmentor. Thanks for your time and watching. I hope you don't mind to hit the like and subscribe button first before everything. Your click to support always mean a lot to me and this channel. Let's start with Facebook. And Facebook stocks have impressively outperformed S&P prediction this year. The stock of the company has soared over 30% year to date. Facebook stock has registered considerable gains throughout the year so far. But as of now, shares of these growth stocks are trading at a conservative valuation. Additionally, it has got a recent price target hike to $500. Many analysts are bullish on Facebook stock right now. So, is it a suitable time to dive into these growth stocks? Let's take a look. Facebook price target is up with promising growth in earnings. The second quarter report shows Facebook revenue jumping 56% to $29 billion with a massive 47% rise in ads prices. The share profit stood at $3.6 per share, beating analyst estimate. Credit Suisse analyst Stephen Ju has moved his price target for Facebook to $500. The strong gains from ads pricing will serve to increase the company's revenue further. Instagram's TikTok-like video will allow Facebook to propel its revenue growth in the following quarter. Facebook's idea to boost advertising in various markets will help the company to register further gains. Besides, Facebook stock is on sale right now. Facebook is one of the largest tech companies with a massive market capitalization over $1 trillion. The company is poised to earn $14 for each share throughout the current year. Therefore, the stock would come with a PE ratio of 27. If it hits the earning projection, it will signify the 40% jump in EPS since 2020. On top of that, analysts believe Facebook can grow at a double-digit rate in 2022 throughout the COVID-19 variant outbreak. With its current valuation, this doesn't seem to be far-fetched. Although Facebook stocks have a comparatively cheaper valuation, we should not forget the company's versatility and ability on innovation. The company has substantial cash flow, strong fundamentals, and an impressive balance sheet. Investors should also consider Facebook's strong acquisition skills and highly skilled management team. Again, is Facebook stock worth buying right now? Facebook stock has recently moved higher, thereby making it less viable for investors to dive in at the moment. However, there are strong reasons to believe that it will be wise to invest in this tech stock now. One of the most compelling reasons is the cheap valuation of this tech stock. The stock trades at only 27 times PE ratio, and this comes at a time when the analyst consensus say that earnings per share would jump 30% in the next 5 years for Facebook. After all, Facebook has come with a strong business momentum with strong revenue growth of 56% on a year-over-year basis in second quarter 2021. As per forecast, company revenue growth will increase at a decent 37% in third quarter as opposed to the same period last year. Moreover, analysts believe that Facebook might witness a robust sequential increase in the revenue for third quarter 2021. According to tiprank.com, analyst rating consensus, Facebook stocks are a strong buy. Out of 28 analysts, there are 24 buys and 4 hold ratings. The average price target is $425, and the analyst price target ranges from a low of $380 to a high of $500 per share. What's the bottom line? Indeed, Facebook is a rapidly growing stock that seems to be attractive right now based on its current valuation and strong fundamental. The stock might trade sideways or even fall during the near term, but the stock has more potential to trade at a premium valuation in the near future. Okay then, for the next, let's look into Intel. Intel stocks is reversely at a low valuation, implying great discount to buy the dip. Intel stock is really cheap right now with a low PE ratio of 13 times only. That's far below the valuation of its main chip rivals AMD and NVDA, with PE ratios around 44 times and 55 times respectively. Much of this valuation discrepancy has to do with the company's poor growth and many past missteps, resulted from manufacturing issues and the production delays. But with the new CEO, Pat Gelsinger, Intel might be able to make a comeback. That said, given its low valuation, possible improvements ahead for its business, and its solid 2.6% dividend yields, I'm totally bullish for Intel. The upside potential of its turnaround totally outweighs the risk that it further disappoints investors. Intel stock has paid too much for its past mistakes. In recent years, AMD and NVIDIA have seen strong market share gains at Intel's expense. This has been most severe in terms of CPU market share. Since 2019, Intel has gone from 77% of CPU market share to just over 60%. If it managed to improve, investors could respond by pushing the stock price to substantially higher prices. While it may be all uphill from here, again, the Intel comeback will take more than a quarter or two to play out. In short, it won't happen until at least 2022 that its turnaround share to bear fruit. However, buying Intel stock now ahead of the situation continuing to improve would be a worthwhile move. Why? Again, with shares priced in disappointment already, downside risk should be minimal. In terms, if the company efforts prove effective, it could be able to hit the upside around $85 in the next 12 months, which is a 60% growing potential. The market could also reward it by giving shares a much higher forward valuation multiple. A move to a forward PE ratio from the current 13 times could enable the stock to make its way to even go over $19 to $100 per share. In bottom line, Intel is a buy right now. Admittedly, it's still questionable whether a new CEO will change the story for Intel. Even if it does, it may take time as the stock continues to struggle. However, if investors can be patient, it shall pay to take advantage of the current low valuation. The wait shall be worth it. Not only that, there's also a dividend to collect along the way. Alright guys, once again, thanks for your time and watching. I hope the quick review and analysis of Facebook and Intel stock would be really helpful for your trading and investment as always. I hope you don't mind to hit the like and subscribe button and leave any of your thoughts and comments down below this video, which will be highly appreciated. Otherwise, I look forward to having more with you in the next one. See you.